Hello everyone, Nick Shaheen here looking at Johnson & Johnson. It's also a decent lesson over how do I approach a chart. This is not a trigger alert for anybody as far as trading is concerned. Okay, so it's having a good week, clearly, and it is at a level where this is where people start feeling, oh my gosh, I'm missing out. I need to jump back in. So I'll start with the spoiler alert. This is not where I would start long. That doesn't mean it's not going higher. Here's how I would say it. It is not a clear entry point. It's not an obvious place to start long. So if I'm long, heck, I can ride it out. I can trim, block, whatever. But to start long here, I'm playing into somebody else's hand. So it's had a 10% rally off the quadruple bottom, whatever you want to call it, off support. So I did trade it earlier a few months ago. I can't remember the exact trades, but these lines tell me that I was trying to range bound it and probably caught a falling knife and showed the two possible scenarios where if they take this out, they would get to here. Guess what? They just got to here, and they got to here earlier. So the target was correct, and therein lies the message here. Because I know the target, I'm not the only one that knows the target. So it got here before. It's getting here now. Yes, it's a little higher than here. First of all, the day is not over. Today is Friday. What is it? The week before Thanksgiving, 22nd. So it could close higher or lower. But to me, it's still too late. So if I'm not long already, I shouldn't get long here. Me, personally. So just like I had conviction to go long here, I think I did a video on it. I can't remember. But my message was, the write-up was at least, that this is a company, a well-proven company over a decade, actually over 100 years. So I can give them the benefit of the doubt that they weren't nefarious in doing whatever they're accused of doing, whatever lawsuits they had. And I remember one day it fell on a lawsuit headline and it had nothing to do with all the lawsuits that we knew. It was something in Ohio, specific to Ohio corridor. I think it was Ohio. So, and on a completely different, somebody grew boobs. A man had side effects that gave him boobs that he didn't know about. So I was like, okay, now it's getting in the ridiculous zone to where people are just selling it, but machines are selling it. So that was the time to go long. And the floor held. Look left. This is a good floor. So this was the December crash. And I say it, this was a strong test for all stocks. Sentiment was as bad as I've seen in a long, long time, because even the Fed was against us. Well, here the Fed is with us being the markets, the equities. So there shouldn't be as deep a test. And proof is held, and now they're attacking necklines. So it is a good time to go long. It's not an obvious time to start long. And I'll tell you why. It's rallying. That's great. It's up over 10%. That's usually not reason enough to short it. Don't confuse the message. But it's rallying into this ledge right here, whatever the ledge was, and this whole resistance zone. Yes, they've poked up through it. Yes, there could be another $4 or $5, but I'm not that good at timing that. Look at the size of the ledge here. So this zone, these candles are hard, and they're working their way back in. You can see two zones that are clearly well consolidated this year. One here and kind of one here. But the bulk of it, see that orange line right there? That's the volume point of control. And it's, in fact, it's weighted more down here. So there's more action down here than up here. So all these volume bars that you see down here, they're distributed up here based on where they happened price-wise. So this is the value area right here. I'm going to try to translate it into here. Right here is the value area. So by definition, anything outside of this is unusual based on the last 12 months. Not saying that it doesn't belong out there. I'm saying is once you go into it, onus is on the bulls to prove they belong up there. Because historically, it says, it being the volume, it hasn't been a good place to be for long. Until they come back to it, close above it, and use it, and try to establish a different range and move these yellow lines. This line right here is the one that was most contested, and it's not a coincidence that we have the cluster bottom here in June. So, and here it held resistance for a while, and now it's serving as support. So if I were to sell puts, I'd want to hide behind this line. Let's put it this way. A better entry point, oops, sorry about that. A better entry point would be closer to it because it is support based on this fact right here. This means that the buyers and sellers fought the hardest over this line right there. So it's significant. All right, so that's one way of looking at things. Again, I'm not saying it's time to short it. I'm just saying onus on the bulls is to prove that they can continue higher, so it's not time to start it. That's all I'm saying. All right, so how does this play into the overall picture over the long term? So this is a weekly chart over 5 years. And you can see these same lines. So now, you know, obviously the orange line moves because this is a different span of time, and you can see it's way down here. That doesn't mean it's falling down to here. It's just, it's almost insignificant for the shorter term trades. And it shows that we've gone sideways for a long time. These are good bases. So if somebody's looking at some ABC move, you can consider this a big move, long consolidation period, or even a little bit down, and then another big move going up. But again, shorter term, you can see the ledge here. It's a little bit clearer because it takes away all the other noise. So if I were to, this was the ledge, you can see how it's like, you can chop it right there. And you can see how it was right there. Also a point of contention right in the middle of all the action right here. So this one is right this level right here and this level. So you can see these are levels that have played significant roles in the past. So chances are they don't go through them like butter on the first pass. Although this is pretty good butter. So if you're long it, that's great. So this is where if I'm long credit put spreads, I probably close them, because especially if they were long term, because if profits come fast from credit spreads, call spreads, put spreads, whatever, and there's still a lot of time on the clock and I get like 30% of maximum gains or 40% of maximum gains, I usually get out. It's like a gift. I can reset it in a few days. And if not, so be it. So I missed out on a few pieces of greens. So this is my point of view on Johnson & Johnson, and this is true for any stock. Anytime you run into a prior accident scene, chances are it's going to hit resistance. Again, it's not reason enough all by itself to be shorted. Ooh, I'm looking at Apple. Okay, so markets are open, so I'm keeping my eye on the left. This is the point on Johnson & Johnson. If you have any questions, let me know. If not, there's a free pass at chat room down below. Hit it.